Welcome back. Well, apart from just talking about commodities, AFEX is interested in inclusive and efficient markets in the commodities space, and this requires thinking of the full chain of activities that occur from production to consumption. And that's part of the discussion we are having at the AFEX segment. We have Mr. Yusuf Ogumbi. He's investment manager at AFEX. Thank you so much for joining us, Mr. Ogumbi. Good morning.
Good to have you.
Nice being here.
So what does a typical commodities value chain look like?
Thank you very much. So a commodities value chain spans from the production through processing, marketing, and then ends on the table of everybody. The best way to think of it about your maize and soybean value chain is to look at your plate of rice. So you see your rice, paddy rice, once I've gone through production, processing, marketing, and it's end on your plate. And you also see chicken, which comprises maize and soybeans. And then for the people that take malted drinks, you see a sorghum and malt and like. So that's basically your value chain before you. Must have gone through production, processing, marketing, and then it's on your table right before you to consume.
Okay. Well, for an investor, what should value chain management mean to them?
So for investors, it's critical because for each segment of the value chain, you have different problems and different solutions geared to solving these problems. So for an investor trying to approach any segment of the value chain, you have to evaluate each one of them independently before you bring it together. So for instance, if you want to go into production, you note the problems there, and then you approach it, solve the problems there so that you make your money, you make returns, highest returns. So it's critical to look at it, this broken down level before bringing it together and looking at the entire value chain together. It's critical.
So I am an investor and I'm hearing this, but it doesn't paint any picture. So I'd like for you to paint the picture. I'm an investor.
Yeah.
And you understand, I'm interested in the value chain. So just tell me, okay, you go here, you get this information, you do this, you do this, and then you get this result.
So for an investor, you understand that your greatest evaluation is the risk-return evaluation to take the investment decision. And then, for instance, you are going into the production value chain. You want to set up a plantation of oil palm, for instance. You have to recognize that the technicalities involved in selecting the breed that you have to plant, the technicalities involved in getting the labor you would use, and then how you would then sell whatever you produce from that plantation. Looking at it from that perspective, you've identified those problems just because you are looking at it from the production perspective. And then you can then target solutions. I have to identify the best breed to plant. I have to get the best hands to manage this plantation, and I have to design offtake contracts with my buyers so that I'm able to sell off whatever I produce and make my money off it. So if you also have to then integrate across the value chain, you identify that. You have a plantation, 5,000 hectares, for instance, and then you realize that selling independently might be a problem. So you then integrate into processing. And if you also realize that you have the capacity to do that, you integrate into marketing, whatever you have produced as well. Storage and all the likes, adjoining services, and you're able to develop a holistic solution for yourself just from identifying the production bottlenecks, processing bottlenecks, and then marketing bottlenecks.
Okay, so
basically.
How does AFEX approach the value chains of commodities in focus?
So based on looking at this systemic thinking, you identify that each person has its own peculiar problem, and then the solutions are geared as such. So for instance, in production, you identify that farmers are fragmented, dispersed, small landholdings. So a key solution is how can we bring them together? How can we bring these farmers, how can we aggregate them so that we increase their bargaining power, we increase access to markets, we increase access to finance. So that's the kind of that's the way we look at it. We also look at processors. We realize that they want to procure commodities, but then financing is a problem. Also, where to store it is a problem. So we target solutions as such. We also realize that we have exporters that get export contracts to sell these commodities outside the country, but then they also need financing. Then we design solutions across board to target each and every one of them, each and every stakeholder in the market.
So these are the opportunities that AFEX has made available in this value chain. So how do you present it? How do investors access these opportunities?
So investors also have opportunities across the value chain. So, for instance, at the production level, you have what you call input notes. So, input finance notes to finance farmers who are intending to produce maize, soybeans, and the likes. So, you can invest against these notes on the exchange. You have your ABCP, asset-backed commercial paper that is targeted at the processors, and then they are able to also get the raw material they need to process the raw material they need. You also have the export finance notes that is geared towards the traders. Investors can also invest against this one across the value chain. So if an investor decides that the input finance note is not suitable to his own interest, it goes for the ABCP. If he realizes that the export finance note is more peculiar to him or her, he or she invests in such kind of product. So across board, you have a variety of options.
All right, thank you so much, Mr. Yusuf Ogumbi, the investment manager at AFEX. Thank you. But AFEX is still on. Now we now go to Michael Martins, who is in Abuja for the week ended 19th April. Total trade and number of contracts were up at over 1,000%. Michael, you have a lot of explanation to do this morning. You're welcome to the show, Michael.
Hi, Ini. Good morning. Thank you for having me once again.
Over 1,000%. Please take us through that line. I mean, we really like to understand.
So if you look at the commodities market summary, the total value traded on the exchange over the course of the week went up by 1,161% from around 0.23 billion to close the trading week at 2.9 billion naira. The total number of contracts traded on the exchange also went up by 1,304% from around 12,089 contracts to close the trading week at 169,774 contracts. The total number of deals, however, fell by 22.58% from around 31 deals to close the trading week at just 24 deals. The AFEX Commodities Index, which is the ACI, also fell by 3.09% from 400.14 to close the trading week at 387.77. We have seen no significant change in the AFEX Export Index, which remained unchanged at 159.35. With regards to the volume traded in the exchange over the course of the week, maize was the major culprit, which went up by a factor of 14 from around 11,000 contracts to close the trading week at just over 162,000 contracts. The other commodities that traded up this week were soybean, sorghum, sesame, and cashew. We are still seeing little to no volume for export commodities, ginger, and cocoa. The top and only gainer for the week with regards to the price of commodity contracts on the exchange was sesame, which went up by 1.05%, gaining 500 naira to close the trading week at 48,117 naira per contract. The top losers for the week are sorghum, maize, maize and sorghum, which went down significantly by 5.21%, 4.01%, and 2.74%. We also saw no change in the FETC, which remained unchanged at 13,962 naira per contract. And so that's by and large all of what happened on the exchange over the course of the week.
All right, Michael. So we saw a reduction in prices of sorghum, soybeans, and maize within the week in review. What drove that?
So, I mean, as we very often see with the commodities market, the bullish market doesn't continue forever. As we saw the bullish market play out in the month of January and February, we are seeing a fair bit of consolidation in the market in the month of March and April. But it's more so symptomatic of the procurement windows by all these major industry players. And with regards to the commodities in question, that's maize, soybean, and sorghum, we have what tends to happen is they procure a significant portion of their volume over the course of the year. They procure a significant portion in November and December, and then you see them procure smaller volumes in May and in January and February, and then you see them just sort of wait it out in the market again before you then see a reintroduction, usually around the month of May and June, into the commodities market. And you would also notice that some of those price decreases are usually not significantly more than 5%, indicating that they're just minor retracements and minor consolidations in the market and not fully indicative of a full-on bearish commodities market.
All right, so Nigeria's inflation rate for the month of March rose to 18.17%. I mean, we just discussed that. What are your thoughts on this in relation to commodities market?
Thank you, Ini, for that question. I mean, we have at different points in time over the course of this show spoken about the strong correlation between the commodities market and particularly the food inflation. A bit of the analysis that we did at our firm sort of indicates that that correlation might be as strong as 80 to 90%. So the commodities market sort of indicates, serves as a leading indicator of what you'd eventually see reflected in the inflation rate. But speaking generally, but more so speaking generally from a macroeconomic point of view, I think there are a couple of other factors that are contributing to the numbers that we are seeing reflected in the inflation rate. The first of which would be an increase in money supply that we've seen over recent months, right, with the reduction in inflation and in interest rate and some of the intervention that we've seen by the central bank. And secondly, which I believe would speak more to the food inflation numbers that we're seeing, is the structural issues that we had in the food value chain out of last year, with the COVID-19 affecting production numbers as regards to distribution of inputs to farmers, and also the reduced rainfall that we saw play out last year across the major grain producing regions, with the northwestern region being the only exception, as that would be the second factor. The third factor would be the exchange rate adjustments that we also saw last year, leading to higher higher prices for starting commodities at the beginning of this season, essentially making commodities more expensive to buy. Fourth, which I think also slightly speak to some of the inflation numbers that we're seeing, is the instability in the petrol prices that we're seeing, and also the removal of fuel subsidy that we have seen contemplated by the federal government in recent months. So that, and we're all aware of how that eventually feeds into food prices. I mean, my Uber driver yesterday was complaining that he had to buy fuel. I don't know how true that is, at 400 per pump price. And I have a colleague at work who recently complained that the price of agege bread is not 500. So when you evaluate the collusion of all those factors, right, from money supply to the structural issues in the food value chain last year, to the exchange rate adjustments that we saw all of last year, and also to the instability in the petrol prices, it's not uncommon for you to surmise that the inflation numbers that we're seeing, they're only just starting and they will continue. They are expected to continue upwards. And it's more so the case for why people should actually be invested in the commodities market, because the commodities market serves as a significant edge against inflation. So if you're seeing higher inflation numbers, it's the case that you will see higher return on investment if you're invested in the commodities markets, particularly with spot contracts and maybe even with fixed income notes. So for people that want to invest in the commodities market, we very often advocate that they go to our website, which is www.afexnigeria.com. And also, if they want to get involved trading commodities, whether that's spot contracts or fixed income note, they can always download our COMEX app, which is available on Android and iOS.
All right, Michael, thank you so much. I'll be an investor as long as you promise me profit. Thank you for the update, Mike. All right, we'll take a moment now. When we return, Business Morning returns in a moment. Just stay with us.